Good morning, everyone, and happy Tuesday. The market has been wild, as we all know. Futures were looking brutal last night and on Monday, but they are coming back up now. The market is right around that level that it was on Friday, right around close. It was a lot lower this morning, but it looks like we're at about even, Tom. The SPY just opened up and we're down like 0.5%. So we're definitely set for a volatile week. Of course, it's going to be a short trading week, and everything going on with Russia has been crazy.
Yeah, it really has, and there's a big support down there on the SPY around 426. It's a pretty big level, and we kind of double bottomed there this morning in pre-market, so that's going to be a big level to look at. And then as far as levels overhead, looks like 430, 450 is a big resistance that we almost like triple topped at in pre-market this morning. So the SPY is in a bit of a range, and I'm wondering if it can break this today with all these tensions going on. But yeah, I mean, you're right, Mike. There's just been so much crazy news coming out over the weekend. Putin had his speech and pretty much said he's recognizing parts of Ukraine as independent and stuff like that. So it's definitely not good news. And yeah, we can see the SPY really gap down, and it's just putting a damper on the rest of the market, Mike. But hopefully we start to see those tech stocks come back up today. I know even earlier this morning, like Apple and stocks weren't looking too hot. So hopefully they start turning around here at open.
Yeah. How about RSX, Tom? This is the Russia ETF, RSX. This thing is down almost 12% today, and it's actually trending up like intraday. But we can see like over the past couple months, it just went from like $33 all the way down to $20 that it's at right now, and I believe it was at like 19 this morning. So yeah, right around 19. So this one is getting destroyed, obviously, because war is not good for anyone. But what's very interesting, Tom, is this stock or this ETF is down, let's say 11 or 12%, and like the options that expire in, a couple weeks are, so like a lot of them are not even up 100%. So I think this is like a very, very, very important thing to pay attention to for all of the options traders out there. Is you guys can pick any stock right now and you could, make a prediction on whether or not it will go up or down. But if you're trading options, that doesn't mean that you're going to be right. For example, you can predict that this Russia ETF will continue lower, and you might buy puts and you might lose a ton of money because it's already priced in. So guys, really look at these implied volatilities and expected moves, because I feel like a lot of the newer traders are going to get burned not realizing that the market, especially the options market, prices moves in.
Yeah, you're probably right. It's probably going to end up being like a bit of a earnings scenario. Sometimes we see that where, like obviously the implied volatility is flying up, and then eventually, like whenever this situation like starts to slow down, we'll probably see the IV start to crash back down again, and then it'll screw traders over even more. So yeah, it's definitely a big thing to look at, and look at the way the implied volatility shot up here. I know that Russia has only been in the headlines for a couple of months, Mike, but it looks like heading back into November, this implied volatility started going up. So, man, I mean, it's like the market was pricing this in before anything even happened.
Yeah, that's very interesting. So what probably happened there, Tom, is I would not be surprised if, some, the smart money started, buying up insurance on their RSX holdings or whatever. The main point is that the options prices started to rise before all this even happened, like you suggested. So that's a very interesting point. And Tom, we can't forget about DWAC too, because we actually just had Michael say, "Good morning, guys. Question: I bought a DWAC call for February 25th, 106 strike price on last Wednesday. Only one call option, and I'm up over 100%. Would it be smart to sell or let it expire on the 25th?" Well, see, this is a tough one, Tom, because he has the 106 strike. It's a weekly option, and he only has one of them, so it's not like he could sell half. This DWAC was trading for $138 a couple hours ago, so if I were you, I would make the option risk-free by, it's a little bit complicated, but basically what you do is you find out how much money you paid for your call option. For example, let's say with the 106 strike, let me just try and get an idea really quickly. He said the 106 strike. So let's say he paid $200 for that. you have to have spread trading enabled. So what you would do is if you pay $200 for your call, just consider going to the DWAC options chain for the same expiration and just sell a call that is further out of the money than yours that is worth at least $200, and you'll be risk-free.
Yeah, that sounds like a pretty good way to trade this, Mike, to be honest, since he already has the call and the stock's kind of falling down. So that'll definitely limit your risk there. And hopefully that helps you out because you can kind of take advantage of that implied volatility being so high when you sell that as well, with getting a little bit more premiums than usual. But then again, he might have paid a little bit more for the option in the first place. So, but looking at DWAC, Mike, it looks like it's coming back down actually. And, you know, we're still up 7%, but we're a heck of a ways off that high of 138.
True. Yeah, it's just how everything's been going, Tom. Like, I feel like any stock that even has any decent amount of upwards momentum over the past month or so has just been getting smacked. I mean, like, look at Google as an example. Google reported some pretty awesome earnings. They announced a split. Yeah, they ran up for, a day or two, maybe 3 days, and then they just gave all of the gains back and then some. You know, if this happened, let's say Google's earnings / split news happened, let's say 6 months ago, Google would probably be at like 3,300 by now.
Yeah, you're right. And they even broke that all-time high and had like a bit of a fake out there. So definitely a lot of volatility happening, Mike. You're right. Like, I could have seen them go on a pretty good run, and I think the market was almost anticipating it at the time. But like you said, it just came right back down. Enphase had a similar move to that. And, you know, speaking of earnings, Mike, we had some big ones today. We even had Home Depot report this morning, and look at them on the daily chart starting to turn over in a bad way. It looks like they were in like a bit of a dead cat bounce setup, and man, they gapped below that support at like 340. This is not good for Home Depot.
Yeah, it's been rough, Tom. And let's just take a look at the overall market really quickly. It's been all over the place. Right now, we are seeing some selling pressure, but again, Tom, it's like this volatility is insane, and it's probably only going to continue at least for a couple more weeks, if not months. So the market's been all over the place. We are getting pretty close to some major SPY support levels that you mentioned in yesterday's video, and I believe even today. But yeah, just like a lot of back and forth movement, and I feel like as of right now, the SPY doesn't have a set direction.
Yeah, I don't think so either. It's kind of like right between a range. You know, we have seen some moves at 426, and then we're obviously right below that 432 resistance right now, with 434 being another one overhead. So definitely lots of levels to look at. And honestly, I would just have to lean almost to with it staying flat today. Like, I would think that we might stay within this range. Maybe we'll just like fly up and fly down in the middle of the day. But it does depend on this news. You know, it seems like we're seeing all types of crazy news come out on CNBC. Like right now in the headlines, I'm seeing stuff that say Russia sanctions roll in as officials warn invasion of Ukraine has begun. So I don't know. That's the live news on CNBC. So definitely not good. And, you know, the market's coming down. So I would say stay between the range or lean to the downside. But I'm really praying for a recovery here soon, Mike. Like this volatility is getting insane. And, you know, like, of course we have Russia, but then we have the fact of rising rates over the next few months and stuff like that too. Like, it's like the economy is just taking a bit of a hit right now. Not even like the news isn't terrible. You know, like we say, rising rates doesn't necessarily equate to bad markets, but in the end, like with everything piling on, it's just like, I feel like it's just like a snowball effect at this point.
Yeah, when it rains, it pours, Tom. You know this, so it's, yeah, it's crazy. And I feel like a bunch of things just kind of all happened at once, just like you were suggesting. But then again, the party can't just go on forever. We went on a tremendous bull run ever since like March 2020, and it was like every single week, every single month was just nonstop new highs and uptrends and euphoria. And I feel like we're just in one of those phases where the market is just taking a step back and reevaluating everything. And plus, when you have what we have going on with Russia and Ukraine, that actually adds a lot of fuel to the fire too. And of course, people freak out about rising rates, which I can understand. But yeah, it's been interesting. But on the
Yeah, it
bright
really
side,
has.
on the bright side, though, Tom, just a small little thing on the bright side is this whole situation. If you're someone who does not have a long-term portfolio, or even if you do and you've been buying the dip, opportunities like we're seeing now in the market only come around every couple years. So like if you have solid companies that you've been looking to buy up, there's a lot of good deals right now. That doesn't mean to just go buy everything, because not every stock is a good deal. But if you have a company that you've been just sitting on the sidelines waiting to buy, you have a pretty good opportunity. And again, that doesn't mean it's the bottom. This Russia and Ukraine conflict can go on for months or years, or maybe and hopefully it ends soon. But still, it's presenting one good opportunity.
Yeah, and these things generally don't resolve themselves within just a couple of months. Like we saw with Crimea in the past, it ended up taking a couple of years to finally play out to the full effect. And I feel like that's going to be almost the same scenario as now. And I'll be honest, Mike, like looking at the SPY on like a max daily chart, like you mentioned, we went on that crazy uptrend. And yeah, sure, we had small pullbacks, like little 3% pullbacks here and there, but whenever we see the pullback like we are in the SPY right now, and just the way it's setting up, like it's confirming off of these resistances, we're moving below some key SMA levels, like we're moving below the 100, and then we're also confirming off of it back to the downside right on those resistance levels. It's not looking good on a technical level, and it's just also not even looking good fundamentally. We're having lots of companies reporting bad outlooks for the future. Of course, some have good outlooks, but man, we've seen some big drops on these earnings, and I feel like that the market's it's kind of like pricing this in right now. And then also, kind of like what you mentioned, we were going straight up for almost 2 years straight. And honestly, like if we look at the SPY on just like a price action basis, I feel like that it's just almost setting up like a move to the downside, but that's not necessarily a bad thing. It's almost setting up like a normal move. You know what I mean? Like this is almost like whenever we see like Apple get way too overextended, or like when we see Nvidia, fly up way too much in a short period of time. I feel like that happened with the market during COVID, and you might be able to call it the COVID crash after a year or two, but who knows? We might see it happen.
Yeah, and how about the post from Bimmer I think it was Bimmer. Yeah, Bimmer in the SM chat, Tom. Like it was a retweet of how, I don't know if you could pull that up on the stream. If you could, that'd be awesome.
Yeah,
but if not, don't worry about it. But either way, it was just like a retweet of how the market performed with like different invasions. It showcased the Vietnam War, Gulf War, Afghanistan War, Iraq War, and the first Crimea crisis. And oh, perfect, Tom, perfect. So you can just see like how most of the time the market, it kind of freaks out in the beginning, but most of the time it ends up recovering back up, with the exception of the Afghanistan war. But then again, that was kind of around like the .com crash, right around there.
It was. And then even after like this though, like even if we look at the low, like down here in October, right after the invasion, it recovered right back up after that. So it still ended up recovering in reality, just not like within the first couple months. But yeah, I mean, this is a pretty telling chart here. I cannot believe that. I couldn't believe like what I was seeing when I saw these comparisons here. And, I know that war has been pretty good in the past. And I know that's a weird statement to say, but, like with the United States, like we had the Great Depression going on, and then we got thrown into World War II, and it kind of helped our economy recover after that in a good way. So it was kind of like, I hate to say that helps, but it's like, it's one of those things where like we can see on the charts, it's one of those things that doesn't go down the way people generally think it does. Sure, it does over those first couple of weeks. It might dip back down, but generally it ends up recovering right back. This is a pretty telling thing, and thanks to Bimmer for putting this in there, because it was actually really interesting to look at.
Yeah, so one thing to keep in mind is I would say, like, correlation does not equal causation. So, for example, let's say, with the Great Depression or World War II or whatever, while the market did explode after that, that doesn't mean that, of course, that does not mean the market exploded because of World War II, and there's like a lot of other variables and things to keep in mind. But I will say, kind of like how Bimmer retweeted that, is like, the market tends to I guess you can say, freak out about certain things, and it becomes irrational to the upside and the downside. And, when we have these initial, fears of an invasion or this, that, or whatever, the market normally freaks out about it, but in the long run, it always ends up recovering, at least historically speaking.
Sorry, I was muted, but yeah, it really does. And as we look at the SPX on a max weekly chart, kind of like what we saw in the early 2000s, we can go back and see, yeah, sure, the market was crashing down. They had that invasion, and then you can see just a few months later, we recovered right back up into 2008. Obviously, 2008 didn't go too well, but we didn't have a direct invasion during that time. But yeah, then the market even recovered after that. So pretty telling, Mike. And I like how you brought up the causation because it's going to be pretty important. We don't want people just to be buying up tons of stocks right here as the SPY starting to fall down. That's not a good thing to do. Of course, it's good to buy them up when they're low, and I think getting some stocks right now is a good idea, but just don't go all in yet. Obviously, if the SPY falls below 42, or if the SPX falls below 4,200, or if the SPY falls below 420, I think we could start to see a pretty accelerated sell-off. Like I said, it might only be a sell-off for a couple of months, but it really might hit the market if these tensions keep getting worse and we do see a full-scale invasion. Right now, there's just little stuff with rebels, and rebels are taking little territories and stuff, but we'll have to see if anything real starts to go on, or anything actually with Russia themselves.
Yeah. All right, Tom. I think hell froze over. DraftKings is green.
No way. Let's see. DKNG. Wow, we're up 1.7%. Did some news come out or something?
Or maybe the market just looked at their recent earnings report, and maybe that's why it's popping up. But the market's been so irrational lately, in my opinion. But it's awesome to see it green. But then again, looking at a chart over the past 5 days, it's yeah, it's nice that we have some green, but then again, it's when you zoom out, it's just pretty disgusting. So either way, it's nice to see it in the green. While we are seeing some stocks, let's say, I guess you can say Netflix, Tom. Netflix is down 1.2%, right? Some of these other plays Apple down 1%. Nvidia is slightly in the green, but the main point I'm trying to say is, we're seeing some of these other larger, more established companies like Apple in the red, and we're starting to see some of the growth plays pop up a little bit. DraftKings is in the green. Zoom's in the green, believe it or not. Chewy's in the green. Square, so it's it's good to see it. That's one good thing about today so far.
Yeah, it is. Some of these growth stocks are looking pretty good, actually. And like you mentioned, some of them are pretty green. DWAC was one of the hyped up ones this morning. They're up 6% with that good news and the launch of Truth Social over the weekend. If you guys haven't seen that, there's a huge wait list. I don't know, if you guys want to go look at it, you can, but it's not even really out yet. So it's kind of a weird scenario with them. We have Roku up 6.4%, Mike. Like you mentioned, though, some of these stocks got killed so bad on earnings last week that even though they're up 6%, it's not even that good, because they're not even recovered up to the levels of before earnings. So it's still I'm glad to see them going up, Mike, but it's not enough movement yet. We need to see some nice maybe a week straight of 6% up days. Then I'd be happy, but the chances of that happening are pretty low.
Yeah, we'll see. And then I'm just trying to see some other decent movement that we have so far today. Of course, some of these growth plays are looking good, which is awesome. The market's still kind of uncertain. Gold and silver are holding up relatively well. What else? Roku's popping up a decent amount, Tom. I don't know if you saw that, but Roku's another one of those plays that just got demolished on Friday, and hey, it is coming back.
Yeah, this one was one I threw out there a few minutes ago, and it's really coming. I mean, it has a lot of momentum. I would say out of my whole watch list, out of the main leaders that I looked at, this one probably has more momentum out of any of them so far, and it broke out above that resistance around 116 that it hit on Friday there and ended up going down. So pretty good recovery going on out of Roku. looks like there is a lot of resistance up here right around $130. We're at 120 right now. There might be some resistance around 126 as well, so always be careful of that. But I feel like it could have a pretty good recovery today. Like I said earlier, it got destroyed with earnings, and as we start to recover, like hopefully we can get back up to those pre-earnings levels. Like if we could get up around 140, I'd be really happy with this one.
Yeah, awesome. I mean, I would love to see it. 140 would be great, and I think eventually it will get to that point, but, the market's been so wild lately that, I don't know. We'll see, though. It's up 6% already.
Yeah, it is. Like, I'm not sure it'll get there today. It might take a couple of days, but as we rise up, there's definitely a big resistance at like 126 to look out for, so definitely watch that. And it looks like we're actually catching some intraday resistance around 120. We haven't seen a bounce at 120 in a while, but definitely looks like a big level to look at for today. And then some of these EV companies were doing good, Mike. Like I saw Rivian starting to shoot back up, and I remember George Soros bought into Rivian a couple of weeks ago, or well, I should say the report came out that he bought into Rivian a couple weeks ago. I remember his average price is way higher than the price we're at now, but it's just very interesting to see this stock starting to catch some nice upwards momentum right after a big whale goes ahead and buys in, or at least the report came out that a big whale gets in. Like we all know that George Soros he's pretty influential. I know he's very controversial, but in the end, he's he's a big player in the stocks, and it's pretty telling, that he bought Rivian, in my opinion. I feel like it's always good to have some big players getting in. It's kind of like Charlie Munger buying Baba. It's like, is it my favorite stock in the world? No, but at the same time, the stock's starting to get some good momentum right after a big player bought in. So maybe he knows something we don't.
Yeah, that's true. And another thing is, like, not gonna lie, I've kind of been a hater on Rivian stock. Not their vehicles, but their stock. When it first IPO'd, like when it was trading at 179, I was like, there's no way this company should be valued what it is. And I remember I was hating on it all the times in the live streams. But you're right though, Tom. Like you said, like the fact that Soros is taking a pretty sizable position is definitely something that I look more into. I made a video dedicated to Soros buying the dip with Rivian, and his price average is around 100, but his position is a decent percentage of his overall portfolio, which to me definitely signals confidence in Rivian. So I don't know. I mean, I'm definitely willing to take a look at it. The IV's high, and it's good for shorting puts. They have earnings pretty soon. Of course, they're backed by Ford and Amazon, but then again, they still are trading at a pretty hefty valuation. So let's keep in mind, like when they were at 179, they were the world's third largest auto manufacturer by market cap with 0 in sales. Things have changed since then, but still they have a lot of work to do.
Yeah, they do, and I'm going to be really curious to see how they end up on their next earnings report. The last one went terribly for them, and we can see they ended up falling down to around $100 and then fell way below that. So definitely not good on the last one. I remember they only had like a production target of like 1,200 vehicles or something, or like 4,000, and they only came in at like 20% or something of like their overall goal. So it was definitely a bad report. Hopefully that production for them starts to get better, and hopefully these semiconductors aren't delaying the production the way that they have been over the past year. I have seen that the chip sector is getting a little bit better, so hopefully that's helping them, and that next earnings report is going to be pretty telling for them, Mike. And I'll tell you what, if this next earnings report goes bad and they fall below $50, I'll be jumping up and down for joy, because if they keep going down, I think that they're going to be a good company to pick up at some point. Are they going to be the best company right now? No, but I feel like once they get that production going over the next couple of years, their stock will start to finally, I think, show some nice strength. But like you said, they are still valued pretty high.
Yeah, they have potential. So Tom, the market is turning around, believe it or not. It's actually in the green now. The SPY is actually showing some really good momentum. It's looking good. There's not really too much to say. I'm trying to find some live news. I'm not seeing too many major updates on any Think or Swim articles, but we're definitely seeing some dip buying right here, and it's definitely relieving to see.
Yes, it is. And look at AMD today. Have a day, AMD. They are flying up above the 116 resistance. Man, it's looking like a pretty good play today. It's flying up. We're almost back up to 120 now. Looking at AMD on the daily chart, like, man, they were having a pretty big downturn there, and it looked like they were starting to, sell off in a big way, but they really turned it around today, up 3.7%. I do want to point something out, though, because this might not necessarily mean that the downtrend is over. We can see that just last week, AMD had a huge green candle, and then the next couple of days, they gave it all right back. So definitely be careful, but I feel like as far as today goes, it has a lot of momentum, and it might be a pretty good momentum play if this continues, and maybe we'll get up to 120.
Yeah, other chip stocks are looking decent too. Check out MU.
Yeah, I know. MU's climbing my watch list, up 2.6%, looking good as well. Even Qualcomm is up in the green today, which is nice to see. They're kind of bouncing off that 164 support. I know Nancy Pelosi was buying into MU on that dip a little bit ago, Mike, and it looks like MU's holding up pretty well. And I'll be honest, they're kind of like straddling that high there at like 98.45, right around $100 a share. I'll be really curious to see if they can break out, and their IV is pretty high too, and maybe that's showing we'll see a nice break soon.
You know it. So I'm just trying to see some other plays that are moving pretty well. Zoom's looking decent. These growth stocks are looking pretty decent today, which, like I said, is relieving because it's just been months of just nonstop bleeding with them. But what's interesting, Tom, is if we go to good old DraftKings really quickly, is that we can see IV has just been constantly rising ever since the middle of September, right? And finally, it looks like we're slowing down with IV, which is a big thing, because in the same way that IV started to rise before RSX tanked off, IV is starting to significantly slow down or at least pull back with DraftKings. So basically that tells us is that we can see, like a couple days ago, the options market and market makers were expecting a ton of volatility with DraftKings for the future. And normally this means the downside. Not always, though. But now that IV is dropping, which is showing that market makers and just the market overall is saying, all right, it looks like things are about to slow down soon, which is normally a good sign. Because if we look back throughout history with any stocks, especially during like the COVID crash, right when IV started to slow down, that was when the rebound happened. So that is good to see.
Yeah, that's really good news, and I hope that this is signaling a nice recovery, and hopefully the IV continues down. In my opinion, I think it would be really nice if it keeps going down. Not even for the fact of that DraftKings might start going up. I mean, of course that'll be nice, but it'll be nice to also be able to maybe pick up some nice leaps as DraftKings starts to go up. And right now they're priced pretty high, but if we see that IV maybe half itself or something, or well, not half itself, but if we get back down maybe towards like 80% or maybe down here around like 75%, it might be another good time to maybe grab some leaps or maybe average down if you already got some leaps while the IV was high. But either way, it's going to make the options market a lot more enticing than it is right now. So I'm definitely happy for it, Mike, and hopefully we see that turnaround happen sooner rather than later. I know that we've been waiting so long for these companies like DraftKings and Zoom to finally turn back around. And like you mentioned with Zoom earlier, like I'm glad to see it green, but it just has so much to recover back up. Hopefully we form a good support soon.
Yeah. And they have earnings coming up too. So that'll be interesting.
Yeah, maybe they'll actually beat this time, Mike. Like we've seen some companies do pretty good on earnings, some companies do bad, and it's going to be a coin toss, but I feel like they might do well, especially considering we just went through those winter months. Maybe more people were inside.
Yeah, we'll see. And then Square said lots of resistance for the QQQ and SPY, pre-market high so far. So yeah, let's take a look at the QQQ. It's definitely running up there. And yeah, Tom, what are some of the next major resistance levels on the QQQ?
Yeah, and the QQQ, it actually did get right up around a major resistance. I have a huge resistance right around 345. We didn't touch 345, but we did touch like 340, 350. to 344, and we can see that it's touched all of these levels over the past couple of weeks a little bit. So definitely got to that resistance. So that's going to be a big level to look at there. As far as support today, we had a pretty big support down around like 339 to 338. Definitely lots of movement at that. And then below that in pre-market was the main moves that I saw today, Mike. Big support down there around 332.50. I think that's going to be the main level to look at, is like 332.50 as a big support, and then 345 is the main resistances. Of course, there's some levels sprinkled in between, like I mentioned, but those are going to be the main levels to look at, I think.
Cool. Interesting. So, yeah, that is interesting. Just waiting for just some slowdowns, or just some just like a direction, because I feel like over like the past couple of weeks, the market has been falling in a different way than it has been in the past. Like, it's like, all right, one morning we wake up, Putin says that he's withdrawing troops, the market blasts up. Literally like 24 hours later, we find out that no troops were no troops left the border, and then the market tanked down even more, and then more tensions came in, and it was just a disaster. So kind of like you say, Tom, it'd be nice to at least just get like a good direction, because this back and forth whipsaw not only is it very volatile and unpredictable, but it's also it creates an interesting or a tough way to hedge.
Yeah, it does, because like you'll wake up one day and you'll see good news and the market's flying up, and then by the end of the day, the SPY's like breaking the lows of last week. So it's like, it's kind of insane, the movement that we're seeing. And like you mentioned last week, some of those turnarounds were insane. Like, I know those Fed minutes came out, shot the market up, and then the news came out that Putin like lied, or the US media lied, or whoever lied, and the market flew right back down. And definitely such a crazy market. Like you said, it's just like a whipsaw effect, and it creates so much volatility. It's just hard to trade. And, but it has been good for a couple of certain markets, Mike. We've seen the oil market do okay. Looks like GLD and SLV have been on a pretty good run here. GLD's up a little bit today, but over the past couple of weeks, like the metals market has been on a very nice uptrend, to say the least. And we've seen some of the slower moving stocks like KO that's slowing down today doing well the past few weeks too. It's just all the stocks that I feel like are popular and have the most attention have been doing bad, unfortunately. So hopefully we see the turnarounds like we mentioned. And I feel like with like AMD and stocks like that starting to shoot up today, it might be a good sign, at least in the short term.
Yeah, I agree. And then Ironical said, Neo, rest in peace. Neo's struggling today. That one's one of the growth plays that is not recovering. But yeah, it's been rough for Neo lately. It had highs of like $67 back in the beginning of 2021, which was, about a year ago, obviously, and now it's around like 22. So it's definitely been rough.
Yeah, it really has been rough. And this was actually one of my free day trades today, Mike. I have it if it passes above 23 to grab some calls. If we fall below 22, grab some puts. It looks like the puts are going to play out. There was a big resistance there at 23 that we hit right around market open, ended up falling at. If we fall below 22, I'll definitely be eyeing it up for some puts today. There was some pretty bad downwards movement in pre-market down to around $20. And if we could somehow get back to around 21, I think that would make for a good intraday move below 22. So I feel like this could be a pretty good stock to play today, but definitely, like they said, RIP to NIO. This stock has particularly been terrible, Mike, over the past couple weeks. And look at this thing on like the max daily chart. Like, unfortunately, this stock has just continued to tumble off. And another thing that didn't help this stock is that they're in China as well. So, we've been seeing stocks like Baba and different stocks like Baidu like that continue to fall down. And NIO was getting affected by that news as well, on top of just the other growth stocks going down. True.
All right, so Tom, I basically covered all of the biggest movers on my watch list. Do you have any plays that you're looking at that I missed?
One that's going back up, we did talk about it a little bit, but DWAC is now up 10% today. Like, this is starting to get on a pretty good recovery back to the upside.
I really don't think it'll retest 138 today. Of course it's possible, but It is good to see it overall up 10%, but how about this morning? It was just blasting.
Yeah, that was up a ton to 138. And yeah, I don't think we'll get back up there either, but I feel like we do have a good chance to maybe continue up with some good momentum. Like if we break up above 100 or something, it might be a decent play, but just eye it up, guys. Like if it forms a good support and you start seeing some nice movement, it might be a decent intraday play. Just keep in mind, this one might be a good play for shares, Mike. That IV's at 160%. I know people are playing tons of call options on DWAC, and sure, sometimes you can catch some nice moves and catch some nice winners with it. But personally, I think shares will be the way to go. That IV is just way too high in my opinion. And keep in mind that this stock is risky. There's so much news coming out with it. It just got delayed a couple of weeks ago. They announced some pretty big delays up until March. And then lo and behold, they just announced that they launched the app on the App Store anyways. And I know that it's not available yet, but there's just so much volatility with this one. Twitter could come out with like a lawsuit against them, or Facebook or something like that could make the stock go crazy as well. And I'll be honest, Mike, like I've seen some pretty big comparisons to DWAC and Twitter. Like on Twitter, what do? You send out tweets and then you retweet stuff. With Truth Social, I've heard you send out truths and then you retruth stuff. So that sounds pretty similar in my opinion. I'd be expecting some lawsuits soon.
Yeah, that's interesting. Very, very interesting. And you beat me to it with the share thing, because the IV's at like 163. So if you're someone who's looking to bet on like DWAC rising or falling, options probably would not be the way to go. If you wanted to short it, maybe like a put debit spread would be decent, but the IV's just pretty high, just like Tom was saying. So it's like, if we look at DWAC, right now it's at like $90, and let's say you wanted to play it to the upside. If you had like a June expiration at the money call, that'll cost you around $1,500. So that would make your break-even price at like basically 105. So it's like, yeah, shares would probably be ideal, because then your break-even price could just be your average cost for your shares. So your break-even price could be 90 instead of 105. And you don't have to dump $1,500 into an option that's going to decay every day too. But if you wanted to short it, like I said, like a put debit spread would probably be fine, because one, I don't even know if you could find shares to short of this one, because on Thinkorswim it says it's hard to borrow. And then another thing too is like, even if you do short it, it's like you got to be careful with gap ups, because in the past this thing went from like, what was that, $10 up to 175. So the risk has definitely increased with like a naked short.
Yeah, that's insane actually. And even this morning, like in pre-market, it gapped up 65% and then came all the way back towards that closing price of Friday. So definitely some insane moves. You got to be really careful of those gaps. But yeah, it's such a crazy stock, and it's in such a crazy like phase of its company. Like it's a SPAC deal for a new social media company. Like, how often do we have new social media companies? It's pretty rare to see new ones, especially ones with as much hype as DWAC. I think I actually have this pulled up on, here, I actually have the website pulled up so you can kind of see it. This is what it looks like right now. You can like join the waiting list and you'll get put into a humongous, like a big list. I know there's like 300,000 people plus on it right now. So definitely a big one, but it's just in such a crazy stage of its growth, Mike. And obviously this one is going to be volatile as heck for the next like couple of months. I feel like that we almost, as far as like longer term investments, we need to give this one some time. Obviously, sometimes these SPAC deals go insane. And like I mentioned, I feel like there's increased risk with like possible lawsuits and stuff like that. That doesn't mean the company's going to go anywhere. It just means their stock might get like some crazy volatility in the short term, almost like what we have with like Russian news or just bad news with any company. So definitely be careful with this one is what I'm trying to get at. It's going to be a crazy stock, but I'm hoping it goes to the upside. Personally, I feel like it's going to be a pretty good platform, and I think that as long as they don't start doing what the other platforms did as far as censorship, I think that it'll be a pretty good one. Of course Facebook and Twitter, they started out as being, pretty awesome companies. You know, there was like no censorship. You could go on there and really voice your opinions. But at this point, you know, if you go on Facebook and word something wrong, you're going to get yourself banned for a few days. Like, it's kind of insane now.
It's a hard space to get in, Tom. I'm very curious to see how Truth Social goes. Like, it seems like there's a ton of hype with it right now, but I'm curious if this will stick around, and if it does, I'm just very, very interested in how the whole platform progresses. You know, like, I know that it can obviously be a giant hit, not a hip, or it could be a flop, obviously. But it's just a very competitive space, and I think it's very it's an exciting thing, but it's just interesting because it's just like you don't see a brand new social media platform every day. You know, it's a very tough space to get into.
Yeah, exactly. And, you know, just like what we've seen with some of these other stocks that have came onto the market, kind of like Rumble. You know, I know Rumble's another one of those like conservative social media companies, and you can see, look at Rumble over the past couple of weeks. It's kind of looked like Facebook. You know, it had that huge tumble to the downside. Definitely not good. I don't know if DWAC is going to affect this one. I'm sure it will because, you know, Truth Social has had so much hype, and obviously Trump's getting on the platform, which is I think the main reason why people are going there. You know, I don't think it would be that big if he wasn't going there. But like, there was tons of other apps just like Truth Social. You know, you had Parler, Rumble, tons of other ones, and they didn't play out. So there's still that risk that it might not work, which you're definitely right, Mike. It's going to be very interesting to see if they can get going or not, and hopefully they can. And the big thing is, to me, Mike, is are they going to get the ad support that is needed? You know what I mean? Like, a lot of companies have been kind of like boycotting some of these right-wing groups and stuff, and obviously DWAC is, you know, they're famous for letting Trump on there. So it's such a weird game because there's so much politics involved, and we're not trying to get into the politics of it at all. We're just trying to just say, hey, the stock's going to get volatile because who knows, you know, like you might have a lot of political heads coming out against it. You know, some will probably come out for it, but I feel like we're going to have a pretty big like social media battle here over the next couple of months as people start to flock to certain sides. You know, I feel like the right side is going to flock to DWAC. The left side's probably going to flock to like Facebook and Twitter and stuff, but it's going to be a crazy thing, and it's definitely going to be a fun thing to keep up with, and we'll definitely be hitting it on these live streams as the news keeps coming out.
We shall see. All right, Tom. So I'm looking back at some of these stocks. The market, as you would guess, is back and forth. You know, it has not made up its mind. But I am doing a quick scan. It looks like some of these growth plays are popping back up. Teladoc and DraftKings are looking decent. Zoom's looking decent too. So it looks like the growth stocks are definitely seeing more, I guess you can say, growth stocks are just getting more consistent flow rather than the market. For example, if we look at Teladoc, the stock's up 3% today. Ever since the market opened, it's been on basically a nonstop uptrend. However, when we look at the SPY, it has been all over the place. It was down initially last night. It ran up, tanked down at open, ran up, and then kind of tanked down again like 10 minutes ago. So that's been all over the place. But it is good to see some buyers flowing into these growth stocks that desperately need to be bought up.
Yeah, it definitely is good. And something awesome with Teladoc, Mike, is they're breaking above this awesome resistance at like $67, and they're having a nice intraday move up. And then they also have earnings later, and I wonder if they're going on a bit of a pre-earnings run-up. You know, we're on 2/22 of 22. I mean, it's pretty rare that we have wow, that's a pretty strange date, Mike. 2-2. It's a string of twos going on here. But looking at the market, I mean, it's awesome to see Teladoc breaking out. You know, we're running up ahead of earnings, and I'm hoping that this is going to show some good momentum heading into earnings because, you know, a lot of stocks have been going down, but we've seen some of these stocks like Enphase report good numbers and move up. But then again, Teladoc is kind of in that same sector like as Zoom, and a lot of like in the same sector as a lot of stocks that have been going down a lot, and a lot of companies that have been going down, like Zoom, have been reporting some bad guidance. So I'm hoping that they report some good numbers here, but man, it's going to be tough for these companies that are, I guess you could call them COVID plays, like Zoom and Teladoc report very soon. And I'm hoping that they get some good numbers and go on the turnaround, Mike, because it's just been such a bad downtrend. I know Teladoc has been one of our favorite ones too, along with Zoom and a few others, and it's just been brutal. And that IV's over 100% now.
Yeah. Well, Tom, another thing to keep in mind is nowadays it's not even just about the good earnings. The guidance is giant too, because if you look at Nvidia, like their earnings are pretty solid and the stock tanked down. A lot of it also comes with that guidance. And as we saw with Netflix, their stock just got absolutely destroyed because of their guidance. So definitely be on the lookout for that. That should be big with especially like I guess you could call the COVID plays like Netflix, or not Netflix, Teladoc and Zoom. So keep that on your radar. And then we have Sean saying, gonna have to talk with my boss. We can't be scheduling meetings during Stocked Up Live. There we go, Sean. I'm sure you already saw this, but Sean, health rose over and DraftKings is in the green, surprisingly. After the bloodbath on Friday, at least it's in the green today. So I guess that's something to be happy about so far.
Yeah, it's one good thing to look at, and I'll tell you what, if we could start to continue up here today, it would make for some nice intraday moves out of DraftKings, Teladoc, Zoom, Roku, CRSR, Rivian, Lucid, like lots of growth stocks are up today, moving very well. You know what you should do, Sean? You should tell your boss you have a brilliant idea, and then you should throw our stream on the television right in the middle of the meeting. That would be awesome, Get us in there, Sean. Tell your boss you have a good idea. Maybe he'll get some DraftKings, and maybe as New York legalizes and as more revenue comes in, maybe he'll do pretty well on his positions and then give you a promotion or something. But no, I'm just playing. But either way, the market's doing great, and man, it's nice to see these growth stocks up, Mike. You are totally correct. They are starting to have some nice moves, and like looking at DraftKings on the 1 minute, it's starting to move up in a good way, and I love the way it's bouncing off the 1750 support that we broke this morning. Well, it was a resistance, now it's acting as support, and then we're also moving off that 1000 SMA, which is a good sign.
True. Oh gosh. We have George saying OCGN. I have not looked at OCGN in quite a while. OCGN, 20%. Wow. So the stock's at around $4. I don't really trade penny stocks, but hey, 20% is pretty big. It looks like earnings is coming up soon, and it looks like the Think or Swim News is saying that OCGN shares are trading higher after the company announced the FDA lifted its clinical hold on the company's COVID-19 vaccine study in the U.S. So that's good. Of course, anything with the FDA and especially COVID and vaccines is pretty big.
Yeah, it definitely is. And I will say, though, one big thing with COVID is that I've been seeing lots of reports lately that people like Anthony Fauci have been coming out. He was really big on the vaccine and on COVID and everything like that for a couple of years. He actually came out a couple of weeks ago and said that we are in the ending stages of COVID. So hopefully that's a good sign. And as far as COVID goes, Mike, I actually saw some good news over the weekend where the UK's Prime Minister Boris Johnson was lifting all COVID restrictions over the next couple of months. Well, he was actually lifting them by this Thursday. They're still in a little bit of like a COVID phase until like April or something. But in the end, though, it's nice to see some of these countries lifting restrictions. And I know that there's still some counties and states in the United States that still have restrictions. So it's going to be very interesting to see if maybe, if maybe some of these restrictions start going away. Maybe, the society starts getting back to normal in some certain aspects, and maybe we won't have to worry about getting tested to go watch the hockey game or getting tested to go to an event or something like that. Maybe we're getting back to normal.
Hopefully. So yeah, just doing another quick scan, Tom. We basically covered all of the major movers today. Some growth stocks are looking great. The market's holding up. But yeah, we covered everything for the most part. DraftKings is looking good. AMD's looking good. Some of the major movers like Apple and the market are not looking the best. But yeah, I mean, do you have any last minute thoughts, Tom, before we wrap it up?
Yeah, let's just eye up some of the, some stocks we didn't really look at too much today, Mike, were some of these oil stocks that have been going insane with this Russia news. And wow, oil's just, it's also been like a whipsaw, Mike. Like, look at oil here over the weekend. We had futures gap down. We moved down to $89 with the futures. We fly all the way back up to that $95 resistance heading into this morning, and then we fly right back down to 92. Like, this has been all over the place as well. We have the oil stocks like Exxon flying up and then gapping right back down. It's another heartbeat monitor situation, definitely getting crazy out of some of these stocks. And my watch list is like 50-50 today, Mike. I'm glad to see a lot of these bigger stocks like Nvidia, AMD starting to climb back into the green. But the thing that I'm a little bit worried about now is we're seeing some of these stocks like Baba, for example, in the red. Like, Baba's down like 4% today. The China plays continued to go down. We have SoFi down. Roblox is down again too. So while some growth stocks are doing great, some are also just still lagging behind, unfortunately. And even in the EV space, we have stocks like Lucid doing extremely well. And then we have stocks like XPEV and NEO, starting to move back to the downside. So it's definitely mixed across the board. And I would say, like, as far as the overall market goes, I'm still waiting for the SPY to break some of these solid resistances. Like we said earlier this morning, there's a pretty big resistance, like at 435 to 436. I feel like if we break 436 to the upside, we can start to get a good move. But I'm just really waiting for a nice continuation, Mike, because like you said earlier, it's just like a whipsaw, and it's just such a hard market to trade when you gap down in the morning and then you fly all the way back up, and who knows, by close we might be below 426 at this point.
True. All right, well, before we close out today's stream, I just want to personally thank all of you guys for joining. So Tom and I really appreciate all of you, and we love doing these streams, and the market's been wild lately, to say the least. So thank you guys so much for joining. Thank you, George, Vicky, Hunter, Mike, Michael, Square, Iranical, Sean, and Mason. Thank you guys so much for joining. Growth stocks are looking good today, so that's awesome to see. Some of the leading growth stocks right now are DraftKings, Teladoc, Zoom's looking decent, Square, and Roku. So definitely keep those on your radar. Thank you so much, Head and Bill, for joining. Besides that, have a great rest of your day.